Hi, I'm Brice Payne, and you've entered the Vault, a very special edition of the Vault. This week, we are talking with Alecia Barnette, who is the Senior Vice President of the Care Planning Division of Financial Independence Group in Cornelius, North Carolina. Alecia, thank you for joining us today.
So glad to be here.
Now, long-term care is your specialty. You've been with Financial Independence Group for how long?
27 years, and long-term care is really my passion, and excited to be here today.
So you know your way around a long-term care policy and the whole topic of that. So we wanted to do a episode on the Vault on long-term care, as there's not too many subjects that might be more important to a sound retirement plan. And we thought there'd be nobody better to join us than the Miss Alecia Barnette. So again, thank you, Alecia, for joining us. Let's start from the bottom and work our way up on the subject. What is long-term care insurance? Start us off with the basics.
Great question. So long-term care is really for people who get older and become frail and need some type of assistance with their activities of daily living. So your everyday stuff, bathing, dressing, toileting, etc. But ultimately, what long-term care insurance is going to do is it's going to pay for care that you might receive in the home or in other places.
Okay, very good. That's a good starting point. Give us some statistics, if you have any, on how likely is it that somebody would need long-term care insurance at some point in their life, or long-term care help at some point in their life?
That's a great question as well. So 70% of people over the age of 65 will need some type of care. In fact, 1 in 5 will need care for 5 or more years.
Okay, wow, 70%. If you're over 60, 70% of us of that age are going to need some type of long-term care at some point in our life.
You got it.
Okay. Break down for us what long-term care expenses run. What do they cost?
Long-term care expenses are pretty expensive. So, in fact, there's a great website for those listening. You can go to longtermcare.gov, and there's a cost of care survey you can pull up, and it's running around $109,000 a year annually for a facility. It's about half that cost for home health care and assisted living, but it's very expensive, and costs are only going up.
Only going up. Okay. That does sound like it would be a degree of expense that if you hadn't planned properly for it, it could thwart your otherwise well-made retirement plan.
It sure can. And in fact, if you don't have a plan, your money is your plan. So if you've been allocated something, you've allocated everything.
Exactly. Okay. Those costs, they're not going down, but they're going up. Any healthcare cost, for that matter, is going up more than the average inflation rate. Is that not true?
That is true. In fact, for long-term care services, it's running about 5.3% average a year. So it's really gone up, especially after COVID.
Yeah. And so the average rate of inflation on everything else is around 3.27. So it's a couple percentage points more of cost increase than the typical thing we might be out there buying at the grocery store or wherever.
That's right. And people really are, when you're thinking long-term care, you're not thinking about today's dollars. You are thinking in the future.
That's true.
15, 20, 30 years out. So it's going to be pretty pricey by the time you need it.
Right. So if you're 60 years old, you might not need care for another 20 years. If it's $109,000 a year now, let's increase that a little bit for what it's going to cost you then. Okay. Who would be a good candidate for long-term care insurance?
Well, the younger you are, the healthier you are, the less expensive it is, the more coverage you're going to get. So with that, that's a pretty extensive question. I could go a lot of different directions here, but the fact of the matter is, the younger you are, the more likely it is that you can get coverage. So we're seeing policies anywhere from age 35 all the way up to age 85, honestly, but when I first started in the industry over 20 years ago, the average age was 72. Now we're seeing in the 50s, mid 50s. So again, the younger you are, the less expensive it is, and the more likely you are to get coverage based on your health.
Yeah, so that you lead us great into the next question that I had. When I talk to Wealth Guardians clients or prospects about long-term care, once in a while I'll get the comment, I'm never going to qualify for that because of X, Y, and Z. But that's not necessarily always true.
That's correct. So it's not a one-size-fits-all approach. I tell everyone this. 5 different carriers can look, for example, at diabetes 5 different ways. We have some carriers that have simplified underwriting, meaning you don't have as many obstacles to jump through to be able to get the coverage. So likely it might just be a phone interview or a few questions. There's even a guaranteed issue chassis out there. So don't think that you're excluded from this type of coverage just because you have health issues.
Right.
If you wanted the life insurance side of the house, then sometimes that's going to require a little bit more underwriting. However, it's still more liberal than your traditional long-term care or your life insurance products out there. So again, don't be scared by underwriting because there really is a solution for everyone.
Can you give us an idea? I know this is a very broad question and there's different types of long-term care. There's traditional, which is kind of, think of it as car insurance, use it or lose it type of insurance. But then there's also asset-based. But let's say somebody's 65 years old in good health. How much is a long-term care policy going to cost them? Just so they have an idea out here of whether or not this is even in range for them.
Certainly. So it really depends on which direction you go. As you mentioned, there's traditional and there's asset-based. Traditional is a very small percentage of policies sold out there in the market because it's like renting versus owning.
Term insurance, kind of.
You got it. So it's going to be less money for more coverage, but people don't like the guarantees associated with it. So if we go the asset-based long-term care route, which is typically written on life insurance or an annuity chassis, for a pay-as-you-go plan, you're looking at probably anywhere from $7,500 a year to $10,000 a year. That can be paid up in 10 years. So that's our average premium for an individual. For a couple, you can pretty much times that by 2. If you wanted to do one and done and pay it off, which you can do, Brice, I don't know if you're aware of that, but you can just do a lump sum, set it, forget it, and then never worry about it again. And our average premium for that is about $150,000 per person for an individual,
right?
Or $200, $250 for a couple.
Yeah, that's what I found when I've been writing policies for a couple that's in good health, somewhere in their mid 60s. Around a $200,000 policy is going to cover more or less, if not all, a very good chunk of what their expenses might be when the day comes that they would use it. And some of those policies, some policies out there will pay for 3 or 5 years or something like that, but there are still policies out there that will pay for an unlimited amount of time.
That's the good news. That's the good news and the bad news. The good news is there's 101 different ways to structure these. So you can see policies anywhere from a 2-year benefit all the way to a lifetime. So if you want true longevity protection, you can have a policy that will pay and continue to pay for as long as you live and need care. But not everybody feels like they need lifetime benefits. So we have those shorter duration, which I would say on average for an individual is around 6 years. Now, again, anywhere from 2 to unlimited. So that's the good news and the bad news. The good news is you have someone to help you navigate which direction to go based on your needs.
Well, very good. If somebody decided, hey, I do want to look into long-term care, what would be their first step?
The first step would be obviously to reach out to you all because it's not a one-size-fits-all approach because we need to find out really what's important to you. How much coverage do you want? Typically what we see is people typically cover about half the nursing home cost, and that'll almost cover 100% of home care and assisted living. And then you can dial that benefit up or down based off your comfort level. But knowing, again, how you're going to fund the plan, because there are several ways you can do that. You can use income.
And that's what a financial planner would help them figure out.
That's right. That's right. It's necessary for you to meet because, again, it's not a one-size-fits-all approach. You could have 10 people in a room, and they might have 10 different policies because maybe you want your family to take care of you, which some policies don't allow for that. Maybe you want to take that burden off your family. Maybe you have longevity in your family and you want to cover lifetime benefits. So it is something that's customizable, and you need to have a conversation with someone in order to determine the best direction to go.
Perfect. Okay. So reach out to whether it's a financial planner or some agent that you've got in the neighborhood. If you're not in the Wealth Guardians neighborhood, look for somebody in your neighborhood who is familiar with long-term care policies, and hopefully they can guide you through which kind would make the most sense for you. So Alecia, I've used up the questions that I had for you in our limited time. What didn't I ask you that I should have? What else would you want to share with everybody out there that we didn't bring up yet? Anything?
I think that there are some things that we could talk about. In fact, I could go all day. You know me in long-term care. But I would say if you wanted to take away a nugget today, not just the fact that you need to be speaking to someone about your plan, but you need to put a plan on paper. For instance, where do you want to receive your care? Which asset do you want to liquidate first? If you've got kids spread out all across the country, do you have a particular facility you like? Things like that. It's hard when you have to reactively deal with a long-term care experience when it's happening. And it's a lot on your family because long-term care doesn't bring families together. It tears families apart. So having that written a plan of care is fantastic to be able to give to your family and your healthcare power of attorney.
Yeah.
And then once you put a plan in place, it's just as important to make sure they have that plan as well. So
they understand it.
That's right.
Yeah. Okay. Well, very good. Well, thank you for that. This has been The Vault. I want to thank you all for joining us on this very special edition. Again, I'll bring your attention to those like and subscribe buttons down below the screen there if you want to catch future episodes of The Vault with normally Doug, Garrett, and myself, but in this case with Alecia. Go ahead and click on those and we would appreciate it. Other than that, I'm Brice Payne and this is Alecia and this has been The Vault. Hey, it's Brice Payne with the Wealth Guardians. Thanks for watching our weekly series, The Vault. Do you know we also have a weekly radio show where we discuss all things retirement? You can listen to the Wealth Guardians radio show live on 94.5 WPTI in the Triad on Saturday mornings. But if you miss the live broadcast, you can also catch it on our YouTube channel or find us on your favorite podcast platform each Saturday morning. Make sure to subscribe wherever you listen so you can get notifications when we release new episodes. Want you to remember, good retirement plans do not create themselves. We'll talk to you soon.